Has anything really fundamentally changed for the people that have been buying gold? The central banks that have been buying gold are buying gold because they want to diversify away from the dollar in the face of the weaponization of the dollar. Has that changed? When President Trump threatens that if you leave the dollar, you're going to get 100% tariffs, does that make South Africa and Brazil say, oh, awfully sorry, it was just a joke, we didn't really mean it? Or does it make them say, we'd better step up our defenses against the weaponization of the dollar? I would argue the latter.
Sitting side by side, precious metals are looking better and better for 2025, as investors lean back for an old perennial in chaotic market times. Not that metal commodities are immune from volatility right now. Renowned analyst AdrianDay states that strong central bank buying, potentially exceeding 600 tons in 2024, is a key driver of gold's performance. He highlights a surge in Chinese demand while North American and European ETF flows remained negative despite rising gold prices. In the US, the SPDR Gold Trust, the world's largest gold-backed ETF, saw its holdings rise to a multi-month high of 904.38 tons, reflecting strong investor demand. Globally, central bank gold purchases also increased, with the People's Bank of China re-entering the market, reinforcing gold's status as a key reserve asset. Furthermore, Chinese insurers' gold investment pilot program and rising holdings of Chinese gold ETFs indicate growing institutional interest in the precious metal. In his analysis, Adrian explains that throughout 2024, central banks worldwide, except Japan, began reducing rates, often before inflation was fully under control. He describes this period as merely the overture, with the real action starting when the Federal Reserve initiated its rate cuts. Fed Chair Jerome Powell said that the Federal Reserve will take a cautious approach to easing monetary policy, adding that the economy currently continues to be in a good place. Higher interest rates may dampen non-yielding gold's appeal despite being an inflation hedge. The market is currently pricing 76 basis points of Fed rate cuts by the year end, starting in June. Reflecting on recent trends, Adrian notes that gold prices fell after Trump's election, as optimism over his economic policies led to renewed ETF outflows. Despite this, he argues that Trump's tariff threats could further encourage countries to diversify away from the US dollar. According to most global fund managers recently surveyed by Bank of America, gold would be the best performing asset if a full-blown trade war broke out. Now we present the clips of AdrianDay's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
We all know why gold is up so much. First of all, is central bank buying. You can see there, 2022, 2023. And then the bit at the end, 2024, is only the first 6 months because we still don't have the final numbers. But the final numbers are going to take us, if not to a new record, they're certainly going to take us over 600 tons. So another good year for gold. So that's the number one reason gold has gone up. The second reason that a lot of people don't focus on is at the beginning of last year, we saw a sudden spike in Chinese buying, and this is Chinese trading, and then it moved over to Chinese consumers and small investors and retail buying gold. And that continued all the way through to the middle of the year. At the same time as this was going on, ETF flows, both in Europe and in North America in particular, were negative. And you can see that here on this rather complicated, I'm happy to send all these slides to anyone who gives me an email, by the way. But the dark blue is North America, and the green, I guess, is Europe. And you can see how all the way through to the middle of last year, there were outflows from the ETF. Particularly in North America. And I'll update this a little bit later. So people are saying, well, what's going on? Why are Americans selling, for goodness sake? And by Americans, I include, North Americans. It's not a political statement on you becoming the 51st state. It's just North Americans. Why are North Americans selling when gold is going up like this? And when you think about it, the reasons were really quite straightforward, quite simple. You had a seemingly strong economy. You had inflation coming down and seemingly under control. You had a seemingly strong stock market. You had a reasonably strong dollar. So all of these all of this is precisely the wrong environment in which you want to be buying gold, right? You want to be buying gold when the dollar's low, when the economy's weak, when interest rates are below, when inflation is above interest rates, when the stock market's rolling over. That's when you want to be buying gold. And so it was not at all illogical for those 2 years that though gold price was going up, Western investors were selling. Now, traditionally, gold starts to move when the Fed first cuts interest rates. And of course, it's not only the Fed as we know, but it's central banks around the world that have been cutting rates. So if you look at really the end of 2023, but all of 2024, you saw central banks around the world, other than Japan, cutting interest rates. And cutting interest rates, importantly, cutting interest rates before inflation was finally killed. And we'll come to that part later. And so the way I look at it is that the last 2 years were really, in opera terms, the overture. And the curtain was simply rising once the Fed started cutting rates. It hasn't completely worked out the way one would expect, because as we know, with the election of Donald Trump, gold took a big hit, in North America, the flows have picked up again, the outflows, because we started to see inflows in August, September, beginning of October, and then once it looked like Trump was going to be elected, and after he was elected, we saw gold take a hit, but we also saw the outflows from the GLD as well as the GDX and the GDXJ, so the gold stocks as well as the gold picked up. Now, why was that? Well, I think we all know it's because there was optimism about what Trump might be able to do.
Investors, including AdrianDay, discuss inflation trends as recent data suggests it's becoming stubborn with an upward bias. He criticizes central banks for cutting rates before fully taming inflation, contrasting this approach with Paul Volcker's decisive rate cuts in the 1980s after inflation was under control. By the early 1980s, gold had reached a then record high of $850 per ounce, driven by high inflation, geopolitical tensions, and a weak U.S. dollar. Prices remained volatile through the late 20th century, experiencing declines in the 1990s as economic stability improved. More recently, during the COVID-19 pandemic, gold prices surged to a new record high of $2,075 per ounce in 2020, fueled by global economic uncertainty and central bank stimulus measures. Even in 2023 and 2024, gold remains a strong investment option, often trading above $2,000 per ounce as inflation and interest rates impact global markets. Furthermore, Adrian points out that the U.S. dollar has lost significant purchasing power over the last 4 years, with cumulative inflation reaching 22%. With the IMF projecting global inflation at 5.9%, nearly triple the arbitrary 2% target, Adrian sees the current environment as one of stagflation, where weak economic growth and persistent inflation create favorable conditions for gold. Let's get back to the interview.
Inflation certainly has come down from the post-COVID years, but if you look at the last 5 months, it looks to me as though it's stubborn at the minimum, or at the minimum it's not going down anymore, it's stubborn and it's beginning to pick up. This is the ISM services price paid, which is very important because it's a leading indicator of the consumer price index that comes out afterwards. And you can see how in the last 2 months that shot up at the end. So I think inflation is going to, I'm not looking for a dramatic runaway in inflation. I'm certainly not expecting it to come down much more, and it's going to be stubborn with an upward bias. And that's at the same time that the Fed and other central banks around the world are cutting rates. So they're cutting rates, and this is important, they're cutting rates before they've killed inflation. If you're Paul Volcker in 1980 and you cut rates dramatically, it's after you've killed inflation, right? But this is the opposite. And this is just a reflection of the dollar. In the last 4 years, not a political statement, in the last 4 years, you can see that the dollar has lost a significant amount of its purchasing power because, of course, the consumer price index is cumulative. It builds on itself, right? We all know that. But if it's 9% one year and 5% the next year and 3% the next year, well, it's 22% because it's cumulative and compounding is 22% over 4 years. So it's meaningful, and people's wages have not kept up with the cumulative increase in the cost of living. And I think we're going to, just to finish on that point, I think we're going to start to see, it's already affecting the lower half of the population, lower half in terms of net assets and income. It's already affecting them dramatically as we have record credit card defaults, and now we're seeing record credit card write-offs. Not just the US, but around the world. The IMF is saying global inflation 5.9% this year. Again, that's almost 3 times the arbitrary target. So inflation is not under control. The economy is weakening, in my view. And this is good for gold. That's called stagflation, when you have stubborn inflation and a slow economy. You don't have to have runaway inflation. You don't have to have a depression. But the combination of stagflation, weak growth, and high inflation favors gold. And that's the period we're heading into.
Short-term price predictions for gold suggest an increase in value and demand in the next years, at least until 2030, showing the price could gradually rise to around $7,000 an ounce. However, price predictions beyond this date could depend on different scenarios. With global inflation still high and central banks taking a cautious approach to rate cuts, do you believe gold will maintain its momentum as a safe haven asset? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.